Hello everyone, thanks for joining us today and welcome to this educational presentation. Now today I want to talk to you about a non-traditional way to trade candlesticks, and I really think it'll take your candlestick trading to the next level because this is based on an entirely different premise than we've all been taught on how to trade candlesticks. So let me first start out with explaining the traditional way, the way I was taught some 40 years ago on how to trade candlesticks. This is what the definition is. Basically says candlestick patterns are reversal patterns, usually occurring at the top or bottom of a trend. So what we're looking for is a trend to be established, and then when we feel it's topped out or overbought, or we feel it's bottomed out or oversold, we're looking for some type of candle pattern to tell us that it's going to reverse. For example, here's an older chart of Snapchat. Obviously, it's in a downtrend, right? So what we're looking for at this point is some kind of clue through candlesticks to tell us that the trend is going to stop and reverse. And maybe it's because there's support right here. Maybe we're looking at some type of Fibonacci or some support resistance tool we have. But either way, it appears as if this may be a proper place for it to stop. And then on top of that, what do we have here? We have two of the most prominent candlestick patterns around. These are bullish engulfing patterns. These are very, very strong reversal patterns in the traditional sense of candlestick trading. So you have your so-called support, you have two bullish engulfing patterns. Can't think of a better way to buy, right, at the very bottom of a downtrend. So let's say you jump in and buy, maybe you buy the stock or maybe you buy some options. You're all excited. You've been trained that this is the way candlestick trading is supposed to be, and then this happens, right? Anyone ever experienced something like this? Now this happens the opposite direction as well. This older chart of Apple, as we see here, took off, all right? Let's say you were thinking it was going to go up, and then all of a sudden it gapped up, and now it's going higher. But now you're a little bit weary of jumping in. It's a little bit overbought, and the indicators that you check and scan on a nightly basis say it's gone up too soon, too quickly, and maybe that chat room you go to says, don't buy this. You know, you wouldn't touch this with a 10-foot pole because it's likely to go lower and lower. So you say to yourself, okay, I'm not going to buy this, it's overbought. But on top of that, remember, you've been trained to trade candlesticks in the traditional sense. And what do we have here? We have a bearish engulfing pattern. This is the same thing as the bullish engulfing pattern, except the opposite side of the coin. Now this is extremely bearish in the traditional sense for the stock to go to the downside. So you're excited and you said, well, you know, maybe it was an aberration with that Snapchat trade where you lost a bunch of money, but you'll make it all back here. So you sell, thinking that it's really going to go lower, and then this happens, right? You see, this is the trouble with trading candlesticks traditionally. Every so once in a while, they will work. But over time, it's been my experience that in the traditional sense, there really is no consistency with trading candlestick patterns that way. So we have to ask ourselves, is there a better way to trade candlesticks? Well, this is what we're going to be discussing today, and I'm actually going to teach you a way to trade a non-traditional form of candlestick trading. In my opinion, it'll increase your odds for consistency tremendously. Here's the good news. Everything I'm going to be teaching you today is one click away on the PTS Primo charting platform. We specifically designed it to make trading simple, most especially these candlestick patterns as well. This is the platform actually that teaches traders a new way to trade candlesticks. So this promises to be a really educational presentation today. I want to thank you all for joining me. My name is Steven Primo. I'm the president and founder of Specialist Trading. I've been trading now for 44 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. So that's where we got the name Specialist Trading. A specialist is someone who made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a stock, a floor trader would walk up to the person who made a market in that, the specialist, and he would specialize in buying or selling anything you wanted in those particular stocks. So I did that in the crash of '87 and the bull market after that. So trust me, anything you think you've seen before, I've already seen it. It's been around. Markets go in cycles. So do trading systems and methods. They all just rebrand and rename themselves. So they've been around. So I formulated Specialist Trading with Pro Trader strategies with one goal in mind, and that was simply to teach traders how to trade. So that's our goal at Specialist Trading. You won't find any chat rooms here or trading rooms. You won't find a nightly signal service. If you've come here today thinking I'm going to tell you what I think of the market, is it going to top out? Is it going to bottom out? Is it going to go higher? You won't find that either, because that goes entirely against what a good educator is supposed to do. You see, a good educator is supposed to teach you those things so that you can make your own trading decisions. A good educator never makes the trading decisions for you. So that's why we don't believe in chat rooms or trading rooms or signal services, because that would be doing you a disservice. We would be putting you in that percentile that ultimately fails. What we want to do is have you to become a consistent trader so that you can make your own decisions and be trading 20, 30, 40 years down the road. That's our goal. So we have students in over 115 countries in every state in the United States. We're happy to announce that. And hopefully we can get a few of you to become students after today's presentation. Now, before we begin, as always, we're required to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this non-traditional approach to candlesticks. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples, since we are an educational company first, all examples are strictly for educational purposes only. Now, we have a way for you to get education on a daily basis. If you don't want to wait each week for our free webinars, you can sign up and become, or I should say, follow us on Twitter. There's our handle right there, the abbreviation for Specialist Trading. I would suggest copying that down, because every day I post different things, from little bits of financial wisdom to signals our strategies have generated, and then I go into detail explaining why they were generated or what the premise was behind the signal. So there's lots of great free education on a daily basis. Feel free to follow us on Twitter. Now remember, as I said in the opening statements, we're different from other webinars you may have attended. If you've come here today, once again, thinking I'm going to tell you what the perfect stock is to buy or what a great signal is and that you should sell or postpone your vacation because this will make you a millionaire, you've come to the wrong place. That's not what we do here. What we do is simply educate traders. We teach traders how to trade so that ultimately you can make your own decision. Imagine, let's say you've played golf for a little bit, but you don't really feel that you're that knowledgeable or skillful at golf. And then some friends of yours invited you away for the weekend, and so you can golf and have a fun time in their own private tournament. But you feel a little uncertain about your game, so you hire a tutor or a coach to bring your level up in playing golf, okay? Well, that coach can help you. He can really, take your golf swing up, and you can really teach you some new advanced ways in which to play golf, but he can't play for you. Ultimately, when you go away with your friends and when you go to that little, tournament that you're going to be playing in, you have to play the game, okay? Trading is no different. I, as a coach, as a mentor, cannot trade for you. I can't furnish you with signals and tell you what to buy or sell, because I've done that before, trust me. And when I first started trading 44 years ago, that's what I did. I tried to mimic and copy everyone else. And 44 years ago, it didn't work for me then. So that style and that concept doesn't work now. The only way traders become consistent is by making their own decision. It's like playing golf. The only way you can become good at golf is by playing. You have to continue to play and to learn and to practice. Same thing with trading. You have to make your own trading decisions. But that's where we come in. As an educational company, our goal is to teach you how to trade with highly consistent methods and techniques so that you can be in charge of your own trading destiny for the very first time in your life. You see, we don't want to just educate traders so that they'll have a couple of good months or maybe even a good year. We want you to have a couple of good decades, all right? That's what a consistent trader is, and that's hopefully what we'll instill in all of you, okay? Now, before we begin, I just want to say we are going to, take questions, but please, I like to take questions at the end. So if you have a question, please wait till the very end to ask, write it down or try to memorize it. I promise I will get to each and every one. But also, the only question I will answer right away is the most common one, and that is this being recorded? Because many times students tell us their internet connection is faulty, they can't see or hear everything clearly, or maybe they have to leave early for an appointment. That's okay. Every one of you will be sent a link to this recording. So if you have any issues or problems, if you have to leave early, don't worry. You'll be able to watch this at your own leisure later on, okay? All right, so remember, we have a good crowd here today. If you have any questions, please wait till the very end. Okay, with that stated, let's begin today's educational presentation. Now, we want to be talking today about an entirely non-traditional way to trade candlesticks. Remember, I gave you the traditional definition, and that was candlestick patterns are used as reversal patterns. So we want to look for a trend, and we want to find one of these candle patterns at the very bottom that's telling us it's going to reverse. And conversely, if we have an uptrend, we want to find one of these candle patterns to tell us it's going to reverse to the downside. That's a traditional sense. That's basically what I just showed you in the opening few slides here. But here's the way I have found that really works. And it goes entirely against the traditional premise. And it's simply this. Candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. You see, that goes against everything we've always been taught. We were always taught to trade them against the trend. That's why they're called reversal patterns, because we're going to reverse the trend. So we're trying to stand in front of a speeding locomotive, a speeding train, and saying, now, according to this pattern, you're supposed to reverse. I mean, that's silly. Every once in a while, that will work, as I said. But over time, I have found no consistency in trading candlestick patterns this way. But I have found tremendous consistency in trading them in sync with the trend. Let me show you what I mean here. Obviously, here's a strong downtrend right here. This is a strong downtrend that we looked at earlier, and here's the very strong uptrend. So we want to be trading with these trends. We don't want to be going against them. We don't want to be viewing candlestick patterns as reversal patterns. We want to view them as continuation patterns. So many students say, well, Steve, what do I use as trend? The stuff I was used or taught, or I spent $5,000 in that course, it doesn't work. Well, the most common ways to discern what the trend is are you can use indicators. A lot of times indicators seem to work. A lot of students like to use moving averages, moving average crossovers. You can use patterns. If you look at bars, one of the most traditional ways is to look at higher highs, higher lows equal an uptrend, and lower lows and lower highs equal a downtrend. Or you can look at time frames. I would probably say that 90% of students have been taught that you want to make sure if you're trading an hourly chart and it's in an uptrend, you want to make sure that the daily chart is also in an uptrend. Even though I don't teach any of these, as you see here, these three most common and generic ways to find the trend, and they're not in any of our teaching, if you want to use these, you'll have some level of results here using these, but they're not the best. For example, as we look at this older chart in Aetna, most traders would say by the time we got up to this point, they say, well, I think we're in an uptrend now because we just made a higher high and a lower high. So now I think I'm going to jump in and buy this. So let's say you buy somewhere around this level. And just when you jump in, it's too late, right? Okay. So this is why students have trouble trading in sync with the trend. We're all taught trading 101. You have to trade with the trend. That's the first thing we're all taught, right? But how do we find out what the trend is? Everyone and their uncle has a way for determining what the trend is. So what is the proper way to determine the trend? Because most of the things we've all been taught are lagging. They're lagging tools. They're lagging indicators, or what we call a day late and a dollar short. So when we ask the question, what we really need is an early trend detector. Is there anything that can tell us in advance, not, a reversal, but just tell us in advance that a strong trend is just about ready to get underway? Well, yes, there is. This is the PET-D. This is a tool I was introduced to some 44 years ago on the floor of the Pacific Stock Exchange when I first started working. At that time, it was called the formula because it was something that you had to calculate by hand, almost on a tick-by-tick basis, and it was just so cumbersome to try and do intraday trading. We could only use it for daily bars because it was just too difficult. You had to go home and figure out this formula. It took about an hour, and then by that time, okay, we figured out what it was. Well, now with the help of high-speed computers and with programmers, we've developed this. Pro Trader Strategies and I have developed it. We call it the PET-D, and it's a color bar algorithm. Here's how it works. Let's look at that old chart of Aetna we shared with you before. And remember, most people would say by this time at the earliest, well, okay, I guess we're in an uptrend, okay? And maybe you have a little bit of success, but if you're not quick enough, you're holding on to a loss. Well, once you apply the PET-D, the color bar tool, it'll give you just two colors, either green or red. The green colors, once you click it on our platform, tell you that you're in an uptrend. The red colors, a downtrend. So now, if we look at this chart again, we see that well in advance, the bars were colored green. So we knew well in advance that we wanted to go higher. And we know well in advance, rather than finding out down here, that we wanted to go lower. Now, one thing I have to explain to all my students is that the PET-D, first of all, is not a prediction tool. It doesn't predict how high or how low something will go. Plus, it doesn't predict the exact bottom or the exact top. It doesn't do that. As you can see here, you know, the highest bar here was not colored red, but it is an early trend detector. It's better than anything I've ever used. So it's just about the best thing, in my opinion, you can apply to determining what the immediate trend is. Now, let's look at these charts again. Obviously, in hindsight, it's easy to say that we were in a downtrend here, but we want to know in advance that we were going to be in a downtrend. Here's the beauty of the PAT-D. Once you apply it, look how right up here at the very top, we had consecutive red bars. So we knew well in advance that we wanted to go lower. We didn't have to wait till down here somewhere, okay? Same thing with the uptrend in this older chart of Apple. All right, obviously in hindsight, this wanted to go up. So it's easy to say we're in an uptrend, but how could we have found out, let's say, somewhere right here? Well, once we apply the PAT-D, right when we gapped up, the first couple of bars here told us well in advance that we wanted to go higher. So here's what we're going to be learning today. We want to trade engulfing patterns that are in sync with the PAT-D, because remember, we talked about engulfing patterns, and they're probably the most popular as well as recognizable candlestick patterns around. So even though this technique can be applied to any candlestick pattern, let's just start out with the easiest and the simplest one to identify. For those of you who aren't familiar with candle patterns, we'll go into a little bit a refresher course in just a few seconds, but we know not everyone trades candlesticks, so let's just pick one today to focus on. These are engulfing patterns. Now, what we want to see in this setup is we only want to buy an engulfing pattern if the engulfing bar, or bar number 2, is colored green. All right, so what do we mean by that? If you're not familiar with what an engulfing pattern is, an engulfing pattern is a 2-bar pattern. All right, usually, but not always, but usually bar number 1 is down and bar number 2 is up. Now, what you want to see is the open to close range of bar number 2 engulf the open to close range of bar number 1. Okay. Now, a lot of students have this difficulty in discerning this because they say, well, Steve, it didn't engulf the entire bar because the low here, the candle, is down here. Remember, a candle pattern, in this case, an engulfing pattern, only requires you to engulf the open to close range of the previous bar. So we're engulfing this open to close range here. Now, this is a high probability signal to go up, but we always used it traditionally as a reversal pattern. What we want to do is see that bar number 2 is colored green by the PAT-D, okay? In this case, it's outlined green because it's an up day. So when you see this, bar number 2 outlined green, this is a high probability up move signal, okay? It goes entirely against what we were taught. We're trading in sync with the trend. So as we look here, someone looking at this older chart of wind would say, well, Steve, I was always taught to look for engulfing patterns at the bottom of a sell-off. And what I'm looking at here is a sideways, non-moving market. In fact, it's got no trend. It's a range market. So I wouldn't look for a candle pattern here. Well, that's the traditional way we were all taught. And remember, I'm here to tell you that there's really no consistency in that. So let's look for an engulfing pattern, okay? Out of all these bars, do we have an engulfing pattern? Yes, we do, right here. Bar number 1, bar number 2, okay? Bar number 2 engulfs bar number 1's open and close range. Now, in order for us to trade this into non-traditional sense, we have to apply the PAT-D. Once we apply the PAT-D, we want to make sure that this bar, bar number 2, is outlined green. Now, if the previous bar is outlined green, if bar number 1 is, that's fine, but it really doesn't matter. All we care about is bar number 2. So we apply it, and we see that, yes, the engulfing bar, bar number 2, is green. So that's our green light. That's our signal to buy this if we want to. And remember, most students would say, well, Steve, that's not the way I was taught. I was taught it's always supposed to be at the bottom of a strong trend. Remember, there's no consistency in trading candlesticks in the traditional sense. All right. If you don't believe me, go out and back test. Look at your last trade you had with candle patterns. How well are you really doing? Okay. Sure, maybe you've had a couple of good winners, but overall, are you really seeing the type of results you want? If you apply the PAT-D, you would have seen that this was a high probability setup, and the stock went up 12 points in 1 week. What happened to the sideways ranging market? Okay. This is the beauty of having an early trend detector with candlesticks. Now, we can do the same thing for bearish engulfing patterns. If you're not familiar with bearish engulfing patterns, they're the same thing. They're just for selling or for going short. So what we want to do is we only want to sell if the engulfing bar, that's bar number 2, is colored red. All right? So once again, here's a little refresher course on bearish engulfing patterns. They're a 2-bar pattern, just like the bullish engulfing. But in this case, bar number 1 is usually up. Doesn't have to be, but it usually is an up day. And bar number 2 is a down day. Okay? Now, what happens is the open to close range of bar number 2 engulfs the open to close range of bar number 1. You see that? Remember, it doesn't have to engulf the wick or the high or low of the bar, just the open to close range, what we call the body. So this is a nice setup here for whatever you're trading. Could be candlestick futures, could be E-mini futures, could be currency pairs, Bitcoin, or stocks. Doesn't matter. Doesn't matter what time frame. And this is, a fairly generic way to trade. But you will increase your odds for consistency if bar number 2 is colored red by the pet D. So once we apply the pet D, you see, yes, bar number 2 is colored red. Now you'll notice that bar number 1 is green. Does that matter? Absolutely not. It wouldn't matter if it were red either. What matters is that bar number 2 is red. So if you see this, you have a high probability down move signal. So let's look at this example once again. This is an FOSL, an older chart. Obviously, we're in a downtrend, right? Now, the traditional sense, the way we were all trained, myself included, is to look for a reversal pattern. That means we should be looking for bullish engulfing patterns. And what do we have here? This is a bullish engulfing pattern, okay? Now, if we were trading the way we were all taught to trade candlesticks, we'd say, well, this is a buy. We've got to jump in. But is it? Here's the beauty of applying the pet D. Once you apply the pet D, we'll see what the color of bar number 2 is. And as you can see, bar number 2 is colored red. The engulfing bar is colored red. Now, not only is that bar colored red, all of the bars have been red. So this is in a downtrend. Remember, you will have a higher level of consistency trading candlestick patterns, any patterns. We're just focusing on engulfing patterns now. But any pattern, if you are in sync with the trend. But right here, an engulfing pattern is a bullish engulfing pattern is out of sync because it's going against the downtrend. It's swimming upstream. You never want to swim upstream when you're trading anything. It's a I hate to say, but you're just setting yourself up for a loss. So obviously, now that you have the pet D, you'd say, well, I'm not going to take that trade, and that was a wise decision, right? What would have been a better decision? To look for bearish engulfing patterns, like the one right here. Think you could have done well selling right here? And if you missed that one, there was another one right here. Okay? So do you see the consistency in trading candle patterns with the trend as opposed to against the trend? Now, when we combine these two techniques, candle patterns with the pet D, we create our candlestick combo. This is one of our most consistent methods for trading candlesticks. It's our non-traditional course, and it's one of our most popular ways for trading amongst our students around the world. The great news is that everything I just explained to you is one click away on our platform. Remember, I said I developed this with Pro Trader Strategies to make it easy, to make it simple. So there's no calculation you have to do to figure out what the pet D is, what color it should be, the way I did 44 years ago. All right? There's nothing you have to figure out except all you have to do is click on the platform, and both the signals and the pet D colors will be generated. That's how easy it is. This is the educational platform that makes candlestick trading simple. So let's see some recent examples all displayed from our platform and show you how simple it is. And these are all examples that happened, many of them in the last couple of weeks or month. Okay, here's an example in ALXN, all right? This was in April coming into May. Obviously, we've been going straight up, right? So we don't need the pet D to tell us we're in an uptrend because it looks like it. But what if we're looking at this and we say, but gosh, that indicator I spent $10,000 on, I really don't know what it's based off of, but it's supposed to work. It says that this is too high and it's really overbought. So I'm thinking about maybe selling it because we've gone up too quick, too fast. And on top of that, that chat room I go to says that you really got to sell this, okay? It's overbought. So you think you want to sell, but remember, this is the way we've always been trained. Once again, I was trained the same way 4 decades ago. And this is not the proper way to trade because we're listening to outside sources, indicators or chat rooms or guys on TV or earnings reports telling us how to trade. What is the chart in front of you telling you? Well, our translator, which is the PET D, is telling us that yes, we are in an uptrend. All the bars are green. And what do we have here? We have a bullish engulfing pattern. Now, traditional wisdom would say, well, no, you don't want to take that. That's at the very top. You only look for that at the bottom. But remember, there's no consistency in trading that way. The way to properly trade candlesticks is to trade them in sync with the trend. So if you have a bullish engulfing pattern that's in an uptrend as defined by the PET D, that's a high probability setup. And look what happened. Next couple of weeks, it went up 10 points higher. So you would have lost money thinking it was overbought. Let's look at another example in VRTX, okay, Vertex. Once again, we're all trained to look for strong trends to the upside, strong trends to the downside, look for reversals. Here we have kind of a sideways, no trend range market. So most of us would say, well, these are the markets I've always told that you're supposed to stay away from. Well, maybe, maybe not, because when you are told that, who's telling you that? Some guy in a chat room or a trading room who probably has no higher level of consistency than you. What is the market telling you? Well, firstly, it's telling us that, yeah, there's some green, there's some red, there's some more green and red. So the market's kind of in an indecision. But on top of that, we have a bearish engulfing pattern right here. And here's another one. And both of these have bar number 2 colored red. So the market has actually given us a couple of setups here to go short. Even though you may want to listen to some guy in a chat room, I would forget that and listen to what the market's telling me. Because if you had sold it, you could have made 10 points in about 4 days. That's how simple it is. How about looking at Intuit? All right, this was just a couple of weeks ago in May. Obviously, it's going straight up. Traditional wisdom would tell us to look to sell this, right? Because it's going up and we want to look for some type of reversal. But what are the color of the recent bars? They're all green, all right? We were red right here, even though we were up. These bars were colored red, but right here, the market changed its mind and said, you know what? I think we're in an uptrend. Now, here was a down dip. As you can see, we opened and closed lower, but the bar is green. So that's just telling you that it's a down day in an uptrend. That's all. There are down days in uptrends. Those are buying opportunities. But even more importantly, what do we have here? Our old friend, bullish engulfing pattern. So most people would never take this trade and say, well, I wasn't trained that way. I was supposed to look at the bottom of a trend for a bullish engulfing pattern. This is at the top of a trend. Well, you would have given away 25 potential points in the next week. As we look at DLTR, Dollar Tree, all right, obviously we're in a downtrend, right? Now we're in a downtrend, and traditional wisdom would tell us, well, hey, there's a bullish engulfing pattern here. We've got to buy it. That's a very bullish sign. But if we add the PET D, we see here that bar number 2 is outlined red. In fact, all the bars are red. This is swimming upstream. This is the way we've been taught to trade candles. Always buy at the bottom for a reversal, always sell a reversal at the top. I'm here to tell you there's no consistency in that. You can keep doing that, but you all know the definition of insanity, doing the same thing, getting the same results. Why not listen to the market? The market's telling you it wants to go lower. All we need to do is add some structure to go with it in that direction, and rather than taking the bullish engulfing, we take the bearish engulfing patterns right here. Here's a bearish and here's a bearish engulfing pattern. And potentially you could have made a quick 12 points to the downside. You see how it's so much easier to listen to the market than it is to listen to some guy in a chat room and then have to pay for it or have to feel like, well, he must know what he's doing, so I'll just blindly follow whatever he does. Trust me, I know all about it. I did the same thing 4 decades ago. As we look at WFC, okay, this is a longer chart going back all the way back to February, March, April, and May. So as we see here, obviously, we're in an uptrend, okay? But how could we have taken advantage of that? Well, we apply the PET D, and we see that the majority of the bars are green. Now, if we look for this bullish engulfing pattern, well, we have 1, 2, 3, 4 examples where we could have taken advantage of, going all the way up. All right. Potentially, if you've taken the first one, potentially could have made 15 points. So this is how simple this is. There's no news you have to listen to. There's no chat room or trading room you have to sign up for. There's no $10,000 course you have to figure out what it means and sit there and go, I have no idea what this is about. You just learn how to listen to the market. All right, let's look at DraftKings, okay? Obviously, we're in a downtrend, okay? The stock has been going lower, and what do we have here? A bullish engulfing pattern. Now, this goes against what I'm trying to teach you today. This is a traditional way in which to look at it. But remember, if this is colored green, then that's okay. So we just want to make sure what the bar number 2 is color is. We apply the pet D. Well, actually, looking back in hindsight, it didn't work well at all. All right? Now, applying the pet D, we see why. It was colored red. You see the beauty of this? The market was telling you, not me, not some guy on TV, not some earnings report. The market was telling you that even though it's a bullish engulfing pattern, don't take it because it's outlined red. It's a bullish engulfing pattern in a downtrend. You don't want to swim upstream. Sure, it went up for 2 or 3 days, but you'd had to have been very quick and you probably wouldn't have made that much. And if you just blinked, you're losing money again. What if we traded in sync? Like taking this bearish engulfing pattern up here. You could have potentially made 18 points if you held it all the way coming into the middle of May just a few weeks ago. And if you missed it, there was another chance to go short right here. As you look at IDXX, here's another example where just looking at 4 bars here, someone would say, there's really no way I can determine what this is doing, but there's a bullish engulfing pattern. Now, most people would say, well, I can't take that because it's a sideways market. But here's the beauty of having the pet D. It'll give you the confidence to know you're in sync as long as bar number 2 is outlined green. So let's apply the pet D. And yes, it's outlined green. So that's all we need to know. We don't need to know anything else other than that. This is a high probability setup to go long. And the stock went up 38 points coming into June, coming into this week. As we look at PENN, okay, P-E-N-N. Once again, only looking at 3 bars. This was in March coming into April. Someone would say, how can I figure out what to do with just looking at 3 bars? Well, actually, it's because the reason why people think that is because I've always been taught I have to do the research. I have to find out about the company. I have to find out about the earnings estimates. I have to listen to those guys on TV. I have to figure out what the jobless claims are going to be. I stopped looking at those things 44 years ago. And if I'm still here, if I'm living proof that you could survive without using those things, then you really don't need them. I mean, if you want to, feel free to use them, but there's absolutely no requirement in any of our courses to boggle down your trading and overcomplicate it using those things. There's no need. Now, obviously, we're only looking at 3 bars here, but what do we have? We have a bearish engulfing pattern, all right? But that's not enough information for us to take it. We need to see that bar number 2 is colored red. So if we apply the pet D, we see, yes, bar number 2 is red. So that's a high probability setup, even only looking at 3 bars. That's how sensitive this method is that I'm sharing with you today. And the stock fell 40 points coming into the middle of May, a few weeks ago. Now here's an example in ORLY, O'Reilly, okay? Obviously, in an uptrend. Now traditional wisdom would tell us to look for a reversal pattern. But what do we have here at the top? We have a bullish engulfing pattern. That goes against everything we've always learned, right? You're never supposed to buy at the top. You look to sell in an uptrend. But that doesn't work. I'm here to tell you today that don't focus on that. All you want to focus on is that this bullish engulfing pattern has bar number 2 colored green. So we apply the pet D, we see, yes, not only is bar number 2 green, but all the bars are green. So this is a high probability setup to go long. And as you can see, the stock went up 50 points coming into May. Okay, a nice little quick trade there, right? So you had potentially 50 points to make. Now, I know a lot of you are saying, well, Steve, that means I would have had to buy right there and sell at the top to make 50 points. And I always say this, okay, listen, in our course, we give you exit levels. We teach you 7 different ways to exit. Let's say you didn't make 50, all right? Let's say you only made 40 points. Let's say you made 25 points. Let's say you made 15 points. Don't you think that's a nice little trade to make 15 points in a couple of weeks? That's, so there's, what we're trying to say is that these are high probability setups to move in your direction. How and where you decide to exit, we teach you upwards of 7 different ways. All we're trying to do as mentors is teach you these things so once again, you make your own decisions. You'll never have us or find us saying, all right, buy this here, sell this at this price, move your stop here. That's your decision. We want you to be successful, consistent traders, not only just having a couple of good months or a good year, but having a couple of good decades. Okay, so it went up roughly 50 points and all of a sudden it started to run out of steam. But what do we have here? We have another bullish engulfing pattern. Normally, this is where we were trained to buy, right? Because we're in a little downtrend and it's a bullish engulfing. That means we're going to go back up higher. But what color is bar number 2? It's red. So now that you've learned the true way to trade, a non-traditional way to trade candlesticks, you wouldn't take that. And that's a good choice because look what happened. Do you see how there's no consistency in trading candlesticks the way we were taught? Now let's look at AVGO. Here's an uptrend. Here's an example of sometimes it will work in the traditional sense, but we're not concerned with buying at the bottom of a trend and selling at the top in a reversal. We're only concerned with what the color is of the engulfing bar, bar number 2. For example, we're going up here in AVGO, all right? We're going up, and what do we have? We have a bearish engulfing pattern. So this, someone would say, well, Steve, that's traditional wisdom. That's what you're supposed to take. You're supposed to go short. You're right, but we're not going to sell this because it meets all of the old traditional rules. We're first going to check it to see if bar number 2 is colored red. And if it's not, we're not going to take the trade. So we apply the pet D, and in this case, yes, it is. It just so happens, coincidentally, to meet the traditional requirements. But that's not why we're taking it. We're taking it because we are in sync with the trend, and look what happened. 45 points coming into the middle of May last month. Okay, let's recap before we go into question and answer portion. Remember, in order to be consistent, to trade this non-traditional way of candlestick trading, you only want to buy or sell candlestick patterns that are in sync with the pet D. Now, I know a lot of you are saying, well, okay, Steve, I get it. You know, I've kind of looked while you've been speaking. I've been looking over charts, and I kind of like to use my tool for the trend, and it seems to work okay, so I think I'm just going to use that. Well, trust me, I did that myself. I experimented with a number of other tools and other number of trending tools and indicators, and there's nothing that works better than the pet D. Why? Because the pet D is an early trend detector. It can discern the trend better than any other tool I've found in my 44 years of trading. So why not trade with the best? The pet D really can help you get in sync before anyone else knows what the trend is. Now, important, ask yourself, do you think these methods can help your trading for the remainder of 2021? I think most of you will answer resoundingly yes. But these are extremely important points to remember, though. What I just shared with you was not a complete strategy. Remember, in order to have a complete strategy, you need to know exactly where you're going to be buying, you need to know exactly where you're going to be selling, and you need to know exactly where you're going to place your stop, because sometimes it may not work. And you're also going to need to know about money management. How many shares to buy? How many contracts? Where do you raise your stop? Okay? All of these things are important pieces of the puzzle. We really didn't talk about any of that today. All we talked about was sharing with you or highlighting a high probability setup. Okay? We didn't talk about signals for entry. We didn't talk about stop placement, exit signals, or money management. You need those things in order to have a full-fledged strategy. So trading a candle pattern in sync with what you think the trend is not enough. You'll only get minimal results. You have to have a plan. Here's the good news. We have a special offer today for all of you attending our presentation. We're going to offer you our candlestick combo special. This is strategy number 5, our candlestick strategy along with the pet D tool. You're going to get instant course access, detailed video instruction. You'll learn all of our different ways to enter, all the different ways to place an exit, and all the different ways to manage your stops. You're going to get the entire course rules. Now, this comes with the pet D color bar tool, and the pet D color bar tool also has different ways to trade it on its own. It doesn't even have to work or be applied with candlesticks if you don't want to. So we're going to also set you up with 4 different trading techniques that just apply the pet D only, all right? This is really great, but remember, once again, everything you just saw, all the displays, all the one-click access was on our platform. Now, what we want to do is offer you 12 months of the platform. Now, this usually costs $1,200, but we'd like to give you a year of the platform just to see how simple it is. So what we're going to do is discount that $1,200. We're going to discount it all the way down to free. We're going to give you a full year free of the platform if you become a member of the Candlestick Combo course. That's a great, great offer. You're automatically saving $1,200. Now, just with the PTS Primo charting platform, you're not going to get just the Candlestick Combo. There are so many other things included. You'll get Strategy 5, the Petit directional tool, along with our proprietary buy-sell line, which automatically tells you the overall trend. You'll get automatic exit levels. So you'll be just with one click, you'll be able to see where these exit levels are. Over 90 of the most prominent technical indicators. Our strength of trend tool, which has the ability to tell you if a trend is running out of steam or if it still has more momentum, along with a host of different ways to trade, methods, techniques that I've accumulated in over 4 decades. And this all comes with personalized tech support. But there's one more thing included with the PTS Primo charting platform, which is really worth its weight in gold, and that's the scanner. We're including the scanner so you can scan for these setups not only on a nightly basis, but on an intraday basis as well. Let me share with you how simple it is. On our platform, under the strategy number 5 ticket there, or number 5 area, you would click that on and you'd see this drop-down menu appear, all right? All you want to do is click on scan, and in about less than a minute or two, after you choose which market you want to scan and you're choosing the strategy 5's already been chosen for you, you'll see green horizontal bars and red horizontal bars. Those are just the buy signals, the corresponding stocks, and the sell signals. It's that simple, okay? And remember, we provide you with the symbol list. These are for any market, roughly currency pairs. You can scan Bitcoin. You can scan Asian stocks, European stocks, Canadian stocks, NASDAQ, S&P. We provide that for all of you, okay? And also E-mini futures as well. Let me share with you what you could have scanned this past couple of weeks. Here's a 15-minute chart of the E-mini. This is going back to the 23rd of May, just about a week ago, okay? And when the market was going up, you could have scanned for all these buy signals. These were all strategy number 5 buy signals, and they're all green colored with the PET D, okay? That's 40 points. If you take the first couple of signals here, that's nearly $2,000 per contract. Now, here's a 4-hour chart of NZD CAD. That's a New Zealand Canadian dollar, okay? A 4-hour chart. Here's a strategy number 5 sell signal, colored red by the PET D, 115 pips in 1 day. That's over $1,000 per unit in 1 day. Let's say you're an investor, okay? Here is a monthly chart of Apple. You can scan for buy signals on a monthly chart as well. Look at all these buy signals going back to 2012 on a monthly time frame. The last buy signal generated in Apple was, believe it or not, in February, March of last year. So these are all strategy number 5 buy signals you can scan. And remember, the only place you can scan for this is on the PTS Primo charting platform. So you're going to get all these things with a host, dozens more of things to really help and elevate your trading along with the scanner. A year from today, you will have wished you became a member of the Candlestick Combo course. Remember, this is one of our most popular courses for trading candlesticks. And as you've just seen in the last hour, how well it works. All the examples I gave you were roughly within the last month or so. So let's break this down. What exactly is our Candlestick Combo cost, and what's the discount we're going to offer you for you today? Well, remember, we're going to throw in a full year of the platform. That's about a $1,200 discount. You're getting that absolutely free. Now, normally, Candlestick strategy number 5 with the PET D would cost thousands of dollars, all right? Thousands of dollars, close to $5,000. Here's what we're going to do. We're going to discount that today for all the attendees for a one-time fee and discount of $497. Less than $500, a one-time fee of $497 and just a $97 per month charge. That's it. And remember, this includes all the different ways to trade with the PET D, the 4 different trading techniques. It includes educational correspondence as well. And on top of that, you get a full year of the platform. Now, included with that is an option if you just like to buy the whole thing in full. If you say, Steve, I'm sold, I don't need to make monthly payments, can I get a discount as well? Yes. As I told you earlier, normally it costs you close to $5,000. For a one-time payment, we'll only charge you $29.95. That's still a great, great discount for all of this. For the PET D, for Primo Candlestick strategy number 5, and the yearly PTS Primo charting platform. Okay, here's how to take advantage of this great offer, because remember, this is only going to be probably going for the next week or so before we go into the next one. So this is not something to sit on and think about, well, next month I'll call you back and see how I feel. That'll probably be back up to the $1,000 range, thousands and thousands of dollars. So here's how to take advantage of this. Contact Pro Trader Strategies. I developed a platform. They're in charge of all the tech support with the platform with them. Also, they're in charge of all the pricing and discounts. I would strongly suggest, if you're interested or you just want to get a quote or you want more information on the pricing, I would suggest calling them directly at 310-598-6677. They have trading consultants working the phones right now. They would be more than happy to take any of your questions. There's absolutely no obligation. They would answer any question you have concerning pricing or tech support, and they would be there to give you a quote. And remember, you can think about it, but I would think no longer than a week or so, because after that, it'll be back up to close to 5,000 again for all of this. Now, this link you see at the very bottom, if you'd like to sign up on your own online, you can click on that link, but I don't believe it's a live link. So a live link has been posted in the chat box on the GoToWebinar column on the far right. So if you just click on the chat box column there, you'll see the live link there. Okay, I said I would reserve the last portion for any questions. So if you have a question, just go to your question and answer box, and I will answer it to the best of my ability. Okay, question. Can you check ORLY with today's red bar engulfing yesterday's green bar? You know, unfortunately, this is not a live class. I don't have my charts open. So this is just a static PowerPoint presentation. I don't have a chart with that. But, you know, if you're a member of our course, you can check that. But if not, that would be something, you know, you'd have to check on your own. Unfortunately, I'm just looking at a PowerPoint presentation right now. Next question. I have the PET already. Would you recommend sticking with the engulfing patterns or other major patterns also? Well, the only reason we show the engulfing patterns is because that's the most recognizable. But you can use this with anyone, whatever makes you feel the most comfortable, whichever one is most reliable for you. In other words, if you like to only trade dojis, okay, then you would maybe apply this with dojis. It's just as simple as that. The reason why we focus, as I said, on the engulfing patterns is because they're so easily recognizable, and they're also a very strong pattern when they are in sync with the trend. So it's up to you. I would just recommend do your own research and see what you like. I personally like engulfing patterns, but it's up to you. Okay. Does this strategy work on 1-minute charts for the E-mini futures? Yes, it does. In fact, I use this personally on E-mini futures as well. That's my market that I mainly trade. I traded the E-mini today. In fact, today I traded the E-mini today. I had one trade. But the point I'm trying to make is that when the smaller time frame you go, the more noise you're going to get. That's, in other words, that's that movement back and forth where you're going to get whipsawed. So just be careful. When you have these really strong trending markets, like say some news event comes out or something happens, or say it's just a sell program or a buy program going on. This works tremendously on intraday trading, whether it's E-mini futures, stocks, currency pairs, futures, it makes no difference. But we all know that when we go into those months, like summer months, where it gets very slow, or when we get into a daily time frame where intraday, say it's the lunch hour, like it is usually right now, it gets kind of whipsaw. That's not, any technique or method is going to have a very difficult time. So I would just say, make sure you really have a strong moving market. But once you do, yes, it can work very easily. I usually look at it on tick charts and on roughly 5-minute charts. And I wait for a nice strong move, and then that's where you see a lot of these setups being generated, okay? And you can tell after you've been trading for a while, you know that when a market is going sideways, and you know when it's just going straight up or straight down. It's really easy to see. You usually see those at the beginning of the day and at the end of the day, okay? Good questions. Sound like you're all experienced traders here. Someone is asking about educational correspondence. Yes, educational correspondence just means that you get my personal email address. You can contact me whenever you'd like, okay? I was answering emails this morning at 3 o'clock in the morning Pacific Standard Time. I answered a student asking questions. So I'll get back to you as soon as I can. Usually no longer than 24 probably the latest 48 hours, but I try to get back as soon as possible. But with classes I'm giving and private mentorships, and a lot of times it's hard to get back immediately, but I try to get back as soon as possible. So we try to make it as simple as possible so that if you do have a question or if something isn't making sense, you can always get an answer really quickly. I have heard other students say, gosh, you answered my question that same day. I'm used to this other class I took where it would take me weeks to get my question answered. Well, we don't believe in that. We try and get back to you as soon as possible, okay? How long is this special lasting? Well, like I said, probably no longer than, I would say, 5 days, 5 trading days. It really has to do a lot with, your interest in it, because remember, you're going to get this video. So we want you to watch it over and over again to see how well it works for you. But in the end, you have to make the decision, because next week I'll be talking about an entirely different course we have, an entirely different educational course, entirely different price, entirely different discount. And so this candlestick combo will most likely revert back to in the $1,000, $5,000 range. So if you're really serious about it, if you like to trade candlesticks, I would really highly suggest this. And remember, that's a full year of the platform thrown in as well, okay? Can we start trading this with a free offer? No, we don't have free offers. I don't know. There's no free offer here, because once you learn the rule, now I'll just tell Steve I don't want it anymore, but now I know how to do it. But this is a free offer. So, that's why we stopped doing that. We did that in the very beginning, but everyone was stealing our work and then wanting a refund. That would be like going into a restaurant and someone giving you a free meal and saying, well, I'll take the free offer after you finish the entire thing. You can't give the meal back after you've already eaten it. The same thing with this. You can't give the education you've gotten back because you already own that. So no, we don't have, but what we do is with Pro Trader Strategies, they will offer you a different comparable strategy or course that you're interested in if this doesn't seem to work well with you or it doesn't fit your persona, okay? That's why I say contact Pro Trader Strategies. They're in charge of all the discounts, all the pricing, and they would be the one to ask. So if you do have a question, they can fill you in. And once again, there's absolutely no obligation. But if you're worried about the effectiveness and you're worried about if it's going to work for you, do a Google search. Look at any of our, online, any of our testimonials. You'll see that we just have numerous students who, for the very first time, have become consistent traders trading our methods, okay? That's the best way to check out our effectiveness, by looking at past testimonials. Okay, good questions. If there are no further ones, I believe we're at the end of the presentation. As we close here, remember, contact Pro Trader Strategies if you do have questions. There's absolutely no obligation. They'd be willing to work with you if you want to work on price, if you want to get another strategy or method. And also, they would give you a quote and you can sit there and think about it. But remember, do not sleep on this, because next week we will be discounting an entirely different course package, and this will most likely revert back to the $5,000 range, okay? Now, as we close and look at our disclaimer one last time, I just want to take this time to thank you for taking time out of your Wednesday. I hope you learned something. I hope you learned something about the non-traditional way to trade candlesticks, but most especially, I look forward to all of you becoming students of mine in the Candlestick Combo course. Thank you so much for attending. I hope you have a great day. I hope you have a great week. I'll see you next time. Bye-bye.